Alrighty guys, what is going up? I hope you guys are all having a great and fantastic day today. Now we have a very special episode today. This episode is geared towards beginners who are just starting to trade and invest the stock market. We're going to be talking about how to consistently grow your account so you can build it up to bypass the PDT rule and a variety of other rules that the stock market and the SEC has. But before we jump into the video here, I want you to do me a couple of favors. The very first one, like the video. Go ahead, like it, do what you guys do. For every like that we get, we're gonna be donating 50 cents towards the Australia wildfires, because right now Australia is literally losing thousands of acres and losing hundreds of thousands of animals due to these nasty fires. So we're donating everything we can. We're doing everything we can here and really to try to save some animals' lives. So go ahead, like the video. Now let's jump into the video. So we're going to start off talking about tips and tricks on how to grow your account, some rules that you guys should probably have, and then we're going to jump on the computer and pull it up so you guys can see how to really use a strategy to your advantage. Now the very first rule that you guys need to have is be patient. Be patient with the stock market. Don't rush any investments or any trades, just because when you do that, you're going to throw out risk management and you're just going to be trading for one thing, greed and money. And I know that's what trading is all about, but you have to be patient, because being patient minimizes your risk and it really makes your head a lot clearer so you're not, confused or overwhelmed. Now the second rule for growing a small account is use a commission-free broker. Like I use Moomoo just because they offer a variety of awesome software on it, free scanning, free level 2, and a variety of other awesome things on there. If you guys want to get a free stock just by signing up with Moomoo, there's going to be a link down below. So you guys can go ahead, click the link, and you guys will literally get a free stock. It could be an Uber stock, it could be a Ford stock, it could be Zyga, it could be a whole variety of stocks that they have, and you guys could really use those stocks, build them up. You guys can invite some of your friends, and then you guys will keep getting more and more stock, and then you guys have a nice little portfolio completely free. So really use a commission-free broker. It's going to make everything a lot easier, just because if let's say you only have $100 in your account and you are using a broker who has a commission and you're already down 6% if they charge a $6 commission. So use Moomoo. It's very easy to sign up and actually use their service. Your account's going to be slow from 2 to 4 months. During this time, you're really going to focus on winning. That's your overall goal for this account, is just to win. When I first started building my account, I was literally only profiting some days $10 or $15. But I knew as long as I was in profit over the course of a year, in the course of 2 years, it adds up. It adds up. All those percentages add up. And before you know it, you doubled your account. And then the next thing you know, you are making $100 a day, $200 a day, $300 a day, $400 a day. And before you know it, you're making, anywhere from $1,000 to $1,200 per week. And you really are only working an hour or 2 per day. It's very awesome. It's sweet. Now, another rule here is use tech. Use technology to your advantage. They have it on their service if you guys are using Moomoo. They have the free AI monitor, which monitors all the stocks, so you guys can literally see what stocks are going up, down, and you can put in your criteria to really focus on the stocks that you guys see value in. So use tech to your advantage, whether that's good scanners, whether that's good studies on your charts, whether that's level 2 or time and sales. Use tech. It's going to help you out, especially starting out, because you're going to be overwhelmed. Yeah, for sure, you're going to be overwhelmed. But if you take the time to practice, you guys will literally realize how much easier it is to trade with tech than no tech. Now the last and final rule is, I know a lot of you guys are trying to figure out how to get past this rule. It's called the PDT rule. Well, there's a couple of things you guys can do. I'm just going to give you guys some examples. The very first one is use a cash account. Now the pro of a cash account is you bypass the PDT rule. The con to the cash account is the funds take 3 days to settle. Just for an example, if you guys have, let's say, $200 in your account, you make a trade for $100. Now you still have that other $100 to trade with, but that $100 that you trade with first takes 3 days before you can use that, if that makes any sense. But cash accounts bypass the PDT rule. Another way to bypass the PDT rule is to option trade. Option trade is literally one of the easiest ways to build up a small account. I don't do it, but I know a lot of popular traders that do it and they succeed in it. One of the final ways to bypass the PDT rule is to swing trade. Swing trading is an awesome strategy that requires you to hold a position more than a day but less than a year, just because when you hold it for more than a year, that's kind of long-term investing, and it's a little different strategy in my opinion. Now obviously if you buy a stock the same day and sell it in the same day, it's a day trade. So this is kind of more than a day. A lot of swing trades actually last from 3 to 7 days, but you guys can easily see a stock go from $3 to $12 in like 2 days. It happens actually quite often. But we're gonna turn to the computer now, break down my small account strategy so you guys can use it. If you have any questions, please ask me down below. Go ahead and ask me any questions that you have, whether that's building up a small account, asking just general investing questions, or if you guys don't want to ask me, there's going to be a link down below so you guys can go to the free Facebook group so you guys can ask questions to a lot of popular traders out there. So let's jump to the computer so you guys can see my strategy and how I turned roughly $1,500 into $14,000 in less than 90 days. So we're gonna go ahead, see that computer over there. We're gonna go to that computer. We'll see you guys. Let's go. Alrighty guys, we are up and loaded here on the Moomoo trading platform. So if you guys want to get a free stock just by signing up, there's going to be a link down below for you guys. You get a free stock just by signing up with them. Now we're going to be talking about how I obviously built up my account here, but we're going to start off looking at the markets here. The very first step is looking here. You want to see the pre-market gappers. So you guys can see all the stocks that were pre-market. Obviously, some of these stocks are up right now. Some of these are down because this is how well they were pre-market. You guys can see it says pre-market change, not market change like down here. So you guys can see we have SRNE. This stock was looking good. We had a nice little gap up this morning, but it just kind of consolidated and kind of found some support here along this 20 moving average line, and it kind of broke below it. Just been kind of fluctuating in that zone. There's a lot more downside potential on the stock because it is breaking below all these moving average lines and it's not looking as strong. So we can move back here to the next stock. We have CPAH. This stock was one of the best movers of the day, up 215%. Now only this morning it was up 40%. So we go back, let's look. It was up 42.4% today. So this stock got another 160% today. Now, what would have been the best time to buy? Obviously, if you guys are buying when it's way up here, it carries more risk each time you buy in as the stock's going up. Now, you might be asking, Carter, what is that? Now, when a stock squeezes up more than 10% in a single trading minute, it gets halted. It's called a circuit breaker halt. So this is just kind of like a waiting period when the stock gets too hot. The SEC and the exchanges say, okay, you guys cannot buy and sell it within 10 minutes so the stock can cool down. So that's what you get, and often you'll get a nice little squeeze out of the gate after. But what would have been the absolute best time to buy with a small account? Honestly, it would have been all the way back here. So as you guys can see, we have this gap. This is the gap and go strategy. So we have a nice little gap here, and we have this squeeze up. 99% of you guys will miss this move going right here. Now this is the best time to actually see. So you guys can see I set the pull because this is the bull flag. So in order to have a flag, you got to have a flag pull, and that's when we get this buying pressure right in here. Now the flag is actually just consolidation. So you guys can see this little resistance right here and the support line right here. So the absolute best time to buy would have been the break of this flag. Now when you would have bought in, we would have bought in right here at probably $1.75, setting our stops right below this because this is a support line. You want to put the stops right below this. So once you do that, our risk would have probably been, looking at it, it would have been probably a risking probably around 10 cents to make 20 or 30 cents. So as we would have bought in here, the stock would have squeezed up. And if you would have missed this move, right here would another been a fantastic time to buy in. This is what you call a 1 minute micro pullback. So when a stock is squeezing up, we'll get a candlestick. Sometimes it might be one or two that kind of form right here. This is what you call a micro pullback. Now during this time, this is when you can also buy in for the break of it. So as we zoom in here, that's so you guys can see it. We would have got in for the break of this candlestick right above it. So let's set another line. So another good time to buy in would have been right around here. Our stops would have been right below this green candlestick, just because if we would have had some sort of sell off with the stock up already this high, we'll have a tendency to get some sort of sell off. Now what I always do is I never buy in the third bull flag, just because it has a tendency to kind of fall short, and it's not really the best overall idea, because normally after 3 we'll get a lot more sell off, and the risk always carries each one more and more and more. Really what that means, so if that's say the second bull flag, there's more risk holding it because there's more downside potential than upside, especially when a stock's up 214%. So moving on here, you guys can see these lines. These are what you call moving average lines. So what they do is they act as support and resistance lines. So when the stock's above it, like how it is right here, this line is acting as a support line for it. So you guys can see it comes in contact with it once, bounces up. Comes in contact with it twice, bounces up. Now when the stock falls below it, this is where you get sell-off. Now the moving average line is acting as a resistance line. So it comes in contact with it here, sells off. Almost here, sells off. Sells off here. So now it broke back above it. What does that mean? It's acting as support now. We get a break above it, support, bounces. Comes in contact with it here, bounces. This would have been another, obviously a good time to buy would have been in here, just because they would have been the first couple support bounces. Now, obviously, the more you get into the stock, the more risk it's carrying. So you might be saying, Carter, why wouldn't you buy in right now? Well, it's already up 219%. It's moving so fast, it's hard to tell. What is the upside? What's the upside, guys? If you guys are asking, you should buy in. It could easily pop back up to $3.35. Okay, so if it goes up 15 cents, this stock could easily squeeze all the way back down to 275 within like 2 minutes. The risk outweighs the reward for this stock. So really that's how I grow my account. I look for these bull flag candlesticks or these 1 minute micro pullbacks on these stocks that are gapping up. Now, why am I looking for stocks that are gapping up? These stocks have fundamental catalysts. Now, really what that means, they have news, they have some sort of thing going on. We can go ahead, click this little news tab right here, and you guys can see at 16:36 they release some sort of news. So that's really at like 4 in the morning. Now at 8:47 they released more news. So you guys can really see that they released some sort of news, and here's the full article on it so you guys can see everything going on with it. It kind of takes a minute to load, but we don't got time for that. But another cool thing you guys got to look out for is this. This is what you call level 2. So you guys can see some of the hidden buyers and some of the hidden sellers. So this is the bid and the ask price. So you guys can see there's a lot more people selling. Well, there was a lot more people selling the stock than buying it. See how it's 71% and then 15%. So there's a lot more people buying the stock, and that will really determine the overall direction of it. So you guys can see there's some buyers right here, and it's not 100 shares, that's 1,000 shares. That's 100 shares with one, and that's 10,000 shares. So right here at $3.38, there's 10,000 shares waited, getting ready to just sell the crap out of the stock, guys. So you always got to be careful. Look at the level 2, look at the time in sales, and really kind of minimize the risk as much as you can. I like to buy stocks that are right above these moving average lines, just because if they fall, they're most likely going to hit this and kind of bounce a little bit, and you might not be out as much money. It's just using smart plays to really capitalize on these stocks. And I like to kind of put it in my price range from $1 to $15, especially when I have a small account, just because I can maximize my share size and I can keep the risk as little as possible. So that is it. That's how I've grown my account. If you guys have any questions, go ahead and ask them down below. Remember to always stay happy, stay positive, and I hope you guys have a great rest of your day. Don't forget about the like thing we're doing. 1 like equals 50 cents donated. So remember to always stay happy, stay positive, and I really hope you guys have a great day and a great weekend. And a great weekend. Take care, everyone. Have a good one.